Hi, I'm Ahyat, and today we're going to talk about how to become a strategic property investor. And we're in the asset financing mindset, the asset financing chapter, and now we're going to talk about property loans. Now, there's a couple of things that you want to look at, some of the salient points, some of the highlights, some of the characteristics of the loan that you want to focus on, that you want to put your eyes on. And I'm just going to have a few sessions of this video to cover all of them. So I'm going to cover the first three, of the things that you should look out for in a property loan. So number one is, of course you want to look at the bank rates. Okay, very quickly, all the property loans, the rates that you get are based on this thing called BLR, base lending rate. So this is determined by the government, so there's nothing much you can do about it. So this is the base lending rate. At the time of this recording, it's 6.6%. Now, it's important to look at this 6.6% and understand what the average BLR has been in Malaysia. So if you take a 30-year average, if I'm not mistaken, it's about 8 to 9% perhaps, yeah? And it has gone up to 10, 11, 12%. So basically the 20 or 30-year average of BLR in Malaysia is higher than what BLR is right now in the current market. So that's what you look at. And bank rates is normally either plus or less the BLR. Okay, so it could be, right now the best rates that I've heard of is 2.4% or 2.5%. So you've got 6.6 minus, let's say 2.4, 2.5, so that you've got 4.2%. That's the bank rate, right? That's the interest rate that you get for your loan. So number two is the tenor, the loan tenor. Right? And let me just go back to the bank rates, right? So bank rates is different if depending on if it's a residential property or commercial property. So perhaps you could get this much for a residential, but commercials you might be lucky if you can get 1.9%. So this is it differs between the categories, right? So similarly in loan tenor, for residential, you might be able to stretch it 30 years or 40 years, in fact, up to the age of 70 years old, to your age of 70. And commercial, you could only get perhaps 20, 25 years loan tenor. I mean, it can stretch. Now, what you want to do in a loan tenor is, if you're investing in a property, you want to stretch it as much as possible so that it decreases your monthly loan commitments, so that there's more positive cash flow to it. So that's loan tenor. And the third thing I want to share about is margin of finance. Margin of finance. So this actually looks at how much the banks actually give you. So let's say your property is 1 million ringgit. All right. So if your margin of finance is 70%, so the banks are going to borrow you 700,000, and you've got to come up with the additional 300,000. And this is the current problem that we're facing right now. The government is trying to cool down speculation, is trying to focus on banks giving out loans only to genuine home buyers rather than investors and speculators, by controlling this. If they're gonna tune this down even further, let's say, can you imagine if the government feels that the property market is still too hot and there's still too much speculation, and they actually bring this down to 50%, so you'll need to come up with 500k and 500k in loan cash, right? So this will really soften the market and will really stop your ability to invest in more. So there's a couple of things. Number one, number two, and number three. We're going to go through some of the important points of property loans in the next video. So thank you so much for watching. See you in the next video. Bye-bye.